All right, market's getting walloped here a little bit. Investors sort of grappling with a number of issues, right, including heightened political risk. This on the one-year anniversary of Russia's invasion of Ukraine. I think it's shifting this conflict, with the news that we've had in the last couple of days, into a more ominous gear. Speaking of which, the Fed guessing game has also shifted into a higher, more ominous gear. As economic landing now, the pendulum is back to a hard landing. This is policymakers are leaning, in my mind, on really questionable data. Still, they're making critical monetary decisions on that. In the meantime, you had two of the biggest retailers in America, more than 2.2 million employees between them. They lowered their guidance for the rest of the year this morning. Both Walmart and Home Depot, they drove same-store sales. And I want you to take a look at this. So same-store sales at Walmart, 8.3%. That sounds really good, particularly, coming up from 5.6%. By the way, the street was looking for like 5.2%. But how did they get there? Transactions were actually down. Average tickets soared. I mean, this is almost a 200% increase in average ticket. That means people are paying a lot more. That's inflation. And that's, of course, the kind of thing that it cannot continue. We all know that. And I think Walmart acknowledged as much in the meantime. Meanwhile, we did hear the interview, several interviews with John David Rainey. He's the CEO of Walmart. And this is one of the quotes he had. He said, quote, "The consumer is very pressured," adding that if you look at economic indicators, balance sheets are running thinner, savings rates are declining relative to previous periods. So the company lowered their guidance. Ironically, this earnings season, though, has seen a sharp decline in mentions of recession. Conference calls now, less than 5% of companies are saying recession or saying the word. That's down from 17% in the third quarter of 2021. Now, here's the thing, though. Just one sector, the talk about recession is actually higher quarter over quarter. That's the financials. Those are the banks. I'm not too sure if that's good news or bad news. It doesn't help. Of course, the banks know what's going on here, right? And then, of course, we get to the Fed's preferred gauge on inflation, right? This number we're going to get later on. This morning, we got PMI reports, the global PMI reports, U.S. PMI reports, and they were above consensus. So any little shadow of hope that maybe we would rally vanished on that. And again, the PCE report, this is Friday. And here's the thing about this report. Been going up, right? So you have the overall PCE has gone up and core has gone up. Yeah, we peaked a long time ago, but I think people were hoping that by now that would be your sort of trajectory. I want to bring in from Bianco Research, their president, Jim Bianco. And Jim, so Walmart CEO expressed serious concerns about the health of the consumer. And I got to be honest with you, I trust him a whole lot more than government data. And yet the market seems to be focused on more, again, last week, this week, most of the data's come in hotter than expected. Just what is your thoughts now? Bad news being bad news, but not bad enough news to get the Fed to move off.
Well, yeah, I guess it really depends on what kind of bad news he's talking about with the consumer pulling in. Is that because they're losing purchasing power because of inflation? Or is that because they're worried or they've lost their job or they've lost money in the markets or some combination that they're pulling back? He wasn't clear on that, but I suspect he's talking about that people are losing purchasing power because of inflation. That would be more consistent with the government data that we've seen, that the economy's been stronger with the soaring of interest rates that we've seen in the last 2 weeks or so. And with Wall Street now widely coming out and saying the Fed's no longer going to stop at 5.25
right
on the funds rate. They're going to keep raising rates.
So you never did buy into this sort of soft landing scenario, but what about the realization the Fed might want to have to wait? I mean, this 2% target, and a lot of folks talked about 2024, maybe even 2025. And if that's the case, does the Fed take that into consideration? Can they say, okay, listen, we know our objective is further out. Do they have to overdo it in the meantime?
Well, they don't think they're overdoing it, and that's the thing. If the economy, to use the airplane metaphor that we're all overusing, no landing, which means it doesn't slow down, it just continues to move along, the Fed's going to interpret that as we've raised rates 500 basis points. I understand everybody's hyperventilating. That must mean we're going to go into recession, but we're not. So 5% on the funds rate is not too high, and we'll keep raising rates. I think that's how they're going to interpret it.
Right.
So as we go in, if you said, look, maybe 2024 is when inflation slows down, but it's not now and the economy isn't now, there's no reason for the Fed to stop. They'll go to 5.5, maybe even flirt with the idea of going to 6. So that's what the bond market's starting to sniff out. We're just going higher in interest rates. And that reality is starting, I think, in addition to geopolitics, slap the stock market across the face.
So interesting, because you did post a chart about the bonds. I have your chart here. But here's the thing. We've got these inflows going into bonds. So is someone getting this wrong then as these yields now begin to really take off?
The market tends to be momentum driven, which means everybody kind of gets all excited and they all run into the market and they overdo it, and then the market turns. And remember, it was only February 2nd, and 3 weeks ago, that we were at 333 on the 10-year note. We're at 394 now. That's a giant move in 3 weeks. And that was when everybody was saying, that's it, we've peaked, inflation's done, everybody get in the bonds because there's going to be a big gain in bond prices. And they overdid it. And that's what that chart's showing. That's why usually the flows tend to be contrarian. When everybody gets pessimistic, the market turns higher. When people get too optimistic, and this is more than a one-year high, usually turns down.
Well, we'll take the pulse of folks after today, because bond yields are soaring, the market's cratering, and I don't know that there's a lot of optimism today. Always love your insight, Jim. Thank you very much, my man.
Thank you.
All right, folks.